Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures. This is the daily chart, and the blue line there is the 9-day simple moving average, which has been pretty important the last, say, 6 or 7 sessions. What we're seeing now is we are seeing a slight breach of that 9-day. You're seeing the middle band, the 20-day simple moving average, rise up. It's 2015 and change today. You still have this floor here at 2020 to 2021, which I maintain needs a test. And having that test come probably in the area of the middle band when it does come is going to set up a fairly important moment for the markets for the rest of this month. So yesterday they tried to take it up to new highs. You had the Fed minutes come out, which had been a nice catalyst the last time the Fed minutes came out. They popped it, made a lower high versus 54, and they haven't been able to get it back. And it is down now about 11 handles right now from the Fed reaction high, the Fed minutes reaction high, I should say, and it's traded as low as 36.75 in the overnight. So one of the things we've been looking at is the fact that the Russell has been leading the ES. It bottomed first, it started to V first, it broke through all of its major moving averages first. What's happened over there is this. This is the Russell futures. It also rode the 9-day. Then we cracked it yesterday. It cracked the middle band. And what we're going to find out today is if the middle band is going to go resistance. If it does, it'll yield a little bit deeper pullback in the Russell. And I think that would be the main catalyst for a swift test of the middle band in the ES. So I will absolutely be watching what happens in the Russell today to see if this green line remains resistance or whether, this is just kind of a sloppy 2-day test of the middle band that pops up and then we start to look at new highs again for the Russell. I would imagine the Russell has to retrace a little more before it can bounce. But let's keep our eyes on the prize. What all this is, again, these V's, that's the Russell. Here's the S&P, this is the E-mini. These V's, even when they roll over, it is very doubtful that they are going to turn into an A, okay? V-A. What is far more likely is that we would be in the process of making a higher low versus the 1813 low, and there's certainly a lot of room on the chart to get that done for a move back to new highs into the end of the year. It will be very hard to get to much higher prices from here. It simply has not retraced enough. And you see the hesitation when we move back to highs or near highs like we did yesterday. Fed minutes, good enough reason to rally, always has been, right? Couldn't take out 54 yesterday. That tells me that there's hesitation up above 50 and that we need to retrace a little more so that the dip buyers and the like can reload. So I expect the ES to follow the Russell to break this 9-day and go test the middle band in the next day or two. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.